It's October 8th and we're back here looking at the markets. What a market. What a market. We were down significantly in the morning. We broke below those Friday lows on Friday. And of course, the NASDAQ got destroyed. We were down up to 2% at one point. We did take a leg lower around midday when that whole Google data breach news came out. That took us lower. Google bounced right off that 200-day at 1136 or so and recovered quite nicely. The NASDAQ was down a little less than 1%. S&P broke even, almost broke even, and same with the Dow Jones. If you did look at our last play from last week on Google, we had the 1,200 puts at $10. We did sell them at $30, but they went to around $80, $90, which is quite incredible. But yeah, the markets were down a bit. S&P closed nearly flat, and it seems like the market doesn't want to break yet, which is kind of wild to think about because the bears have all the ammunition they need with the elections and the 10 years and tech rolling over. There's so much going on that they could probably break the market, but it just seems like the market's too strong. So yeah, we'll see what happens. So in this video, we'll talk about some Forex, Constellation Brands. I'm sure you've heard about that. STZ, a great bullish divergence in that stock. ABT, Spotify, and then some other charts and stocks and some general stuff. The whole shebang. But before we begin this video, we want to remind you that whatever we say is not financial advice. I want to repeat, it is not financial advice, and you should always do your own due diligence. So with that being said, let's begin. Alright, so the first stock we're going to look over is STZ. It had quite a crazy day today, up 2.5%. It's had bullish divergence for the past week or so after those crazy earnings. And everyone's playing this as an indirect way to play the marijuana space. You have the Canada approval for next week for recreational use throughout the whole country. And as you all know, STZ has a nice stake in CGC, which, by the way, saw some nice call flow. So what I like to see in stocks is them beating earnings and then running after. So this is exactly what's happening in Constellation Brands. It filled up that gap at 228.86 or so. I have that written right here. Or 228. There's an error. Let me correct that really quick. 228. And then what I'm targeting is I'm looking for some early strength this week, hopefully tomorrow. And then if that fills, I'm targeting the 230 and then 234 level. And if the market supports this, I think this stock is going to go much, much higher. So what I'm doing to play this is I was already previously in the calls. I was in the 225s for this week, and I'm in the 225s for next week as well. I did take the profits on the other ones. I'm letting these bad boys run. So we'll see what happens. My stop loss is around 225 if it does go down to there. But this stock has crazy strength in it, and I do see it going a lot higher. And thanks to Kramer, this one got pumped very nicely. You know all about Kramer, right? That boy pumps. But yeah, STZ's been getting some nice analyst upgrades, and you know, it's just hot right now. In this kind of market, that's what I love to see. When tech goes down, when everything else goes down, I love to see the bullish divergence. I like to play what's working, and Constellation Brands is working. And another stock that I'm looking at, Abbott Labs. Look at this chart, just beautiful, beautiful. Look at this uptrend. So I'm playing this space. It's more of, you can say, a safety play, and they usually work really well in this type of environment. Today, these medical device plays did go down. As you can see, Abbott's, if I look at it on the 3-minute chart, it was getting flushed. It was up nicely around 72.50. That's the place I'm targeting. I'm in the calls for next week. 71.50 has got in around $1.10. But you can see that it just got sold off really hard around midday market and then recovered nicely up. So I like when a stock recovers like that. But as I said, I'm targeting the 71 or 72.50, and my stop loss would be around 70.60. And if it does get to 72.50, I'm expecting the calls to go up at least 50%. as long as they don't decay. But the risk reward seems pretty nice in Abbott Labs for me. I did see some nice call flow, and they've been buying it up, so you always want to be on their side for the most part. Look at this beaten down one. This stock's down, what, 7 days in a row? 1, 2, 3, 4, 5, 6, 7 days in a row. So when the stock was down here, I did see some put sellers and some call buyers. They have earnings on November 1st. Don't know how the earnings will be, but I'm not that degenerate that plays earnings, so I do not care. But I did buy the 167.50 calls for next week. For a possible bounce play, my stop loss is at 50%. I bought them around $2.30. Where is that? Okay, yeah. So that's not here. But yeah, I did buy them around $2.30. There's been heavy selling because the lockup expiration is over and folks from the inside are selling. And there's rumors that folks from the inside are selling. So that's why the stock's under pressure. But yeah, that's what I have for these 3 stocks. Oh, let me just go over Google really quickly. That was a really interesting one. So we called this one on this downside break. We had the puts at $10 for the $1,200 strike. Went all the way down to that 200-day moving average and bounced really nicely off that. Bounced $20. So the news that dropped today was that Google had a data breach and they didn't disclose it because let's be honest, because they don't want to get regulations on them at that time. So my thing on Google is it's a no touch for me, honestly. I mean, you guys can do whatever you want, but for me, when the company has bad news flow, I usually don't like to play it. I take it off my screen. That's what I'm probably going to be doing with Google. But yeah, that's what I'm saying. So I really don't want to play that. I mean, I'd rather play the Netflixes. You have Amazon, you have Apple, which is incredibly strong. This thing just keeps bouncing back from 220. Anytime you try to knock it down, just look at this. Bounce twice. And heavy, these were heavy days of selling in the market as well. But yeah, that's what I have for this. Do you want to go over the S&P?
All right, guys. So here we have the S&P 500, and right now futures are unchanged, but we are retesting the breakout that we had. So basically, the high that we had posted up in January of this year is at 28.75, and 28.75 is a major level. And as you see, we are holding that for now. Tomorrow, what I would like to see is until that holds, as long as that holds, the trend still remains bullish and the target still remains at the top of this channel. And that would be around $3,000. So at this range, it'd be good risk to reward as long as you're trading the range breakout and retest, which is always really good risk to reward. I always recommend you guys to back test everything. If you guys don't trust it, or if you guys just want to learn more about yourself. But here's one example real quick. Right here, we had this high, we break out, we hold it once, twice, 3 times, and we rise higher, right? Similar situation here. Tomorrow, if the market does dip down to 28.73, or maybe makes another low at 28.55, as long as this channel is holding, we are in a bullish trend, right? So the good risk to reward is going to be at the bottom of the channels to go to position yourself and to make sure that you're not just entering at random moments in the market. So this is basically what I'm looking at. As you see, I'm going to let the arrows do the talking, and this is the Elliott wave count that I want to see. And I would love to see another high in market see 3,000.
Yeah, so
but it could get really ugly if we do break down below this 28.53 level.
Oh yeah, I definitely see a nice flush. So I was saying in my intro, like all the bears have all the ammunition they need. We'll see if they actually can take this thing down. But also the bank earnings are coming up this week. So I think that'll help, give direction to the market. And one thing to note, that it was Columbus Day, so the bond market was closed today. So maybe the talk of the town tomorrow will start with the 10-year yield again. So that's something.
Yeah, they've just been hammering that 10-year yield over.
Because I told you, if it's
really
not,
don't know what to make of it.
If it's not Italy, if it's not Greece, if it's not China, if it's not Trump, it's something. So right now it's a 10-year yield.
Yep. And don't forget, we have midterm elections coming up November 6th, if I believe.
Yeah.
And
November.
Market, may just be not doing jack shit until we get the results from that. But I'm not really sure what the market's expecting, what they want to see or what they don't want to see. But it's just an event coming up. And
Peter Schiff is saying on his podcast, the world's gonna end this month.
Oh, I mean,
No,
if this does break, then let me just pull up. I mean, I never use RSI, but I'm just gonna pull it up real quick and just see how the divergence is from the January high that we had. So let me full screen real quick. Oh no, I need to go on the weekly.
That's fine.
Okay, so here it is. Oh wow, this is dirty. So this divergence that we have is mad bearish. Okay. This high that we had posted up here, you see this huge drop in RSI and how we have a lower RSI here, even though we're making another high up there. That is some huge bearish divergence.
We've had a low volume breakout in the market.
Yeah, that's scary. Yeah, that's scary. Thinking about low volume breakout, imagine if there's just if large volume comes in at this 2850 level, it's still higher than the high that we posted up.
Even with the events that are happening right now, you're seeing how crazy the market is being whipped around. Just like on a small move or small news. Imagine if something actually bad happened. Oh man, these algos would go ballistic. Like they just go nuts, just like in 2015. Remember? That 10% drop in the Dow.
This year's range is, I'm just going to pull it out real quick in my Fibonacci. So this is this year's range. And if we were to retrace this like really generic move that we got here, it really looks fake. Like it's nothing crazy. It's just small stutter step movements. Nothing crazy. All right. So if we do break this channel, my target's going to be the 28 or 2700 level. And that's a good place. That's a pretty nice swing if you think about it. And if you think about it, really, this was this year's low. What are the chances that we go and revisit this year's low? Nothing's really changed in the market. I think we're in the same exact place that we were in when we had this initial drop. Nothing's fundamentally changed. U.S. has just been raising rates, and there's really no point.
Except for the China issue, just getting worse and worse. And
it's just getting worse. Too. So. And if you look at here, I'm just going to transition to
one thing to note is if the China issue does get solved, and if the corporate earnings are quite good when they come up in the next couple of weeks, could see new highs.
Yeah, earnings.
But it's getting choppy for sure. That's definitely true.
This Japanese yen has been getting strong with this, as you can see, obviously with the decline in the markets, but it's coming in on some very very big support, and it did have a huge breakout of there. So like I said before, we're breakout retest, and this is what you like. This is something that I'll be looking for as long as the trend holds here. It is 3 weeks of just straight fat candles, so I would love to see 1 week of just consolidation and maybe a dig deeper into there and showing of some rejection, and then continuation higher. A pair that I've been focusing on heavily this week would be GBPJPY, and that is so because, as you see here, we have been ranging for a minute, and it does look like a distributive pattern is going on. As you see, this high right here, we took that high. Took the high meaning broke that high and took the liquidity above that high. Yet we didn't break this high up here. Therefore, this means that there was a really big sell wall over here, and GJ broke out of this right here, this big downtrend, right? Yep. So we're going to be continuing to be bullish on here as long as it's above here. But in the short term, if it comes back down and retouches this area, that would be really good risk to reward. Just playing the simple retest like I preach. And from there, my target's going to be long term. It's going to be 154, and very, very long term, like 160. And eventually I want to play this top of this channel. If you guys see right here, GJ's just been in this huge channel ever since October 2016. Yep. This has been holding very, very nicely. Right, and I'm just going to play the channel until it doesn't, What
do you think about gold? This thing just doesn't. Gold just doesn't want to move.
Gold's just getting slapped silly. And this consolidation right here does not look strong at all. It's just facing sell wall after sell wall after sell wall. But on gold, if we were to see a break of about, so I mean, the thing is, if gold does start picking up, what are people going to think in the market? You know, it's going to be like, shit, gold's going up. Are
Yeah.
things really getting real?
Yeah,
Like
because I'm
Peter,
telling you, this time like gold's really doing poorly. But if gold goes up, like actually goes up a lot, then you know something's up.
like on gold, if I would love to see 1173 or 1175 if we go to there, and if that holds, um, then my next target would be up here, and this 2015 breaks out, like let's say by like November, by the start of November, or like mid-November before midterm elections or something, and gold just gets a solid breakout from there, then it would be really good, like really good to play this retrace, because there's a lot of empty space up here that it fell from, and it's just paper contracts that are just demolishing gold. So it's bearish until it turns bullish. I mean, bullish meaning breaking 1210. If you look at the DXY, the dollar index, this thing is still like tearing it up. There's no reason why this thing should go down. They faked everyone out with the inverted head and shoulders here. And as you see, that inverted head and shoulder support line, that white line is holding right now so far. So if we do see this trend line break towards the bottom on the dollar, then I will look for some selling pattern and target like this right here, this area, the 95 target, and then see how it reacts there.
You know, the Fed is the puppet master, pulling all the strings and playing with the dollar.
Yeah, I mean, I guess Lord knows what the Fed's doing, man. That's not my game.
Yeah. So is that all you have? Anything else you want to add?
One more trade idea on GBPUSD. If GBPUSD rises into about 1.311 tomorrow, then it's going to be a good risk to reward, considering this high does not get taken right there at 1.313. Let me just get another line in there. And I would be targeting, one second, this green trend line down here again. So something like this into that. So just keep an eye out for that. And yeah, that's all I got for currencies.
Yeah, so I mean, futures are basically flat. We'll see what happens the rest of the week. We have bank earnings. We have Netflix next week. Then we have all the tech earnings coming in, like Google, Amazon, everything. Yeah, we'll see what happens. We'll see if what these companies say in their conference calls about China and whatnot, and you know, go from there. But yeah, that's the market. That's the market. Chop, chop, chop. So with that being said, I would like to thank you for watching our video. Hopefully you enjoyed it and found some value in it. And if you did, please like, subscribe, and share this video. And I want to remind you, whatever we say on this video or on this channel is not financial advice. This is for educational purposes only. Thank you, and have a good day.
Thank you, guys. Peace.